Good afternoon. Today is Monday, July the 10th. The time right now is 5 minutes to 1 o'clock in the afternoon. Now, let's take this opportunity to do a recap of what happened last Friday on Wall Street. Basically, most equity index were actually backpedaling on the back of the non-farm payroll, which suggests that the US labor market is slowing down. Now that will impact how the Federal Reserve treat interest rate as they go forward, although they have already mentioned that they are likely to hike interest rate 2 more times before the end of the year, starting with this month, and that caused market players to actually sell off US equities. And we can see that in the Dow Jones itself, we see the market actually pull back rather sharply on Friday, and that is giving us the idea that the market is doing a technical pullback from a high of 34,588.7 all the way down to perhaps even to touch the set 33,259 to 33,500 levels. So these levels are possibility a level in which it could be a base for another challenge of the high. Okay, so let's see whether that actually pans out. Over in the S&P 500, we also see a bit of a pullback, although not as significant as what we saw in the Dow Jones. The S&P 500 have a high of 4,458.5, and you can see Friday closes on a weak note, although it did not close below the week low, which was at 4,385 compared to the closing at just under 4,400. So this also give us the idea the market may actually extend lower in a three-way pullback, possibly to test the 4,329 levels. And if this level holds, then maybe it will be a good basis for it to propel higher. Now, even if the market do break below 4,329, there is a possibility that another catchment area is between 4,002 to 4,003. So that level is also a good level to actually accumulate position for another rally attempt. Now, in the Nasdaq, we see very little pullback so far. Now, the attempt to rally beyond the 15,285 actually failed, and this gives rise to a double top situation in the Nasdaq 100, and this is also causing price to pull back on Friday. Of course, the news is that it is pulled back on the basis of the non-farm payroll, and this gives also the idea that the market may actually pull back to the 14,500 to the 14,700 range, and that could be a good basis to actually build up more accumulation of long position for another rally attempt. So we will have to watch whether all this rally talk will actually pans out. Now, over in Asia, we see that the Nikkei 225 continued to fall, extending last week's fall from 33,763, and this is also another failed attempt, very much like the Nasdaq that could not take out the 33,773 levels. So this pullback has already done an equality move to as low as 32,065 this morning, and we see a bit of a rebound going on as we are speaking. So maybe this is the good area for market to actually load up on long position between the 32,000 to 32,300 levels for another rally attempt. So we will have to watch closely how the Nikkei perform coming from these levels that we have seen so far. Over in Hong Kong, we can see that Hong Kong has a bit of a spirited rebound from last week low of 18,279.7. Okay, this although falls short of my ideal level to buy, but I think the market maybe is doing that technical rebound here. Overall, the Hang Seng Index is in the bear market, so any rebound here could only be categorized as technical rebound. So let's see whether the market will actually come back here as the week progresses into the 17,700 to 18,000 levels. But for now, the market seems to be rebounding. This morning, we have the release of China's CPI numbers. Now, China do not have an inflation problem. China has the exact opposite because inflation is non-existent. When we look at the CPI numbers coming up from China, we are seeing prices are backpedaling. So what China has is a deflation problem. So it's very different from the rest of the world. And that's the reason why China monetary response has been very different from the rest of the world. So here is giving us the idea that because there is no inflation, prices are coming back down. On the back is that all businesses are just on survival mode, cutting prices to stay relevant, and this will impact the profit margin, which in turn will impact the tax collection from the central government point of view. So this is definitely not a good development, but for now, the Hang Seng market has actually rebounded based on this number. And there is very good likelihood that it may actually struggle, but I'd like to see another dip into the 17,700 to 18,000 levels for me to actually position a more durable buy position. Okay, over in the Shanghai Composite Index, we see a bit of a rebound from last Friday low of 3,190 levels, and this is very minor. We don't see that spirited rebound that we saw in Hang Seng. So this again may give us the idea that if we're going to see further rebound beyond 3,246, it may actually either first challenge the 3,277 levels, or perhaps even have enough momentum to go all the way to challenge the 3,400 levels. So again, we will have to see this as a technical rebound, nothing more than that. Okay. Over in energy prices, we see crude oil continue to edge higher on Friday and coming into my ideal bracket of $73 to $74 levels. The high traded was $73.88, and this morning we see a bit of a profit taking. My long position has all been exited with a profit. This has been long time in coming because I've been holding on to this long position for quite some time now. So this is actually quite a bit of a relief. But if the market do come back down, which I think it may, then anytime the market goes back into $69 to $70, I'm going to buy again. Okay. And in the gold market itself, we can see that spot gold has been struggling. It has gone up on Friday to as high as $1,934.96, almost $35. And this market now is coming back down a little bit. And as the market progresses, there's a good possibility it may grind a bit and then propel higher to the $1,950 levels. So let's see whether this actually pans out, but I think there's a good odds that it will. And over in the silver market, silver has been struggling as well. Now what happened is that the market has a minor three-wave rally to $23.30 last week before pulling back down and then rebound from $22.53. Now this could actually end up as a bigger three-wave rebound targeting $24, and we will see whether this actually pans out as well. Okay. Now over in the currencies, we see the dollar index has been coming down very sharply from a high of 103.28 on Friday, and this pullback here suggests that the market is again resuming its downturn from the high of 104.62. So this could be a bigger three-wave decline. Definitely, if this is the case, the market may go all the way to 100, maybe even marginally lower. So this is laying the groundwork for further losses in the dollar itself. Now, if we do see a bit of a rebound, which you are currently seeing, that rebound at 102.60 to 102.70 is a great area to position short for the next leg of this pullback. Now, over in the euro, we can see euro also have a corresponding rally to 109.73 on Friday, and now we see a bit of pullback, and when we see this pullback, market may actually stabilize at 109 levels. Okay, so look out for a pullback to 109 before the market challenge the 110 half to 110.11. Okay, sorry, 111. Sorry. And over in the sterling, sterling also has hit a major crossroad. Market has a marginal high just by 1 pip against this high at 128.48 because the high is 128.49, and this morning we see prices coming back. So we have a double top here. So in the meantime, if the market do pull back to 127.40 to 127.60, that could actually be a good area to consider buying for the next rally up, maybe marginally above this 128 half levels to perhaps 128.90. So again, this is a very small range in which to trade. Now, if you're not comfortable, you can just stay aside and watch. Over in the Aussie market, we see that Aussie has also come to a double top situation. The market have a recent high at 0.6705, and last Friday high was 0.67 even. So again, this is a double top situation. Will the market go up? I think market upside is quite limited. If we do have a upside, I think the upside is probably going to be contained at 0.67 to 0.6735 levels. So again, a very small trading range. Now, dollar Canadian do have a bit of a movements. We can see that there's a very neat three-wave rally from 1.3116 levels to a high here, which is at 133.87. So this is actually where my original target is at 133.72 to 134.12, and the market hit this bracket and then come down very aggressively, very much like the dollar index. So this gives rise to the same idea of a dollar index rebound. If we see a bit of rebound, which is we are currently seeing anywhere between 132.30 to 133.30 to 133.40, maybe a good level to position short for the next down leg here below 131.16. Okay. Dollar yen remains an enigma, and it has fallen off the cliff, so to say. And we can see that 145 has been a big contest here, and the market has been very respectful of this level, knowing that the last time the Bank of Japan came in to intervene was at this exact level of 145. So the market has actually gone sideways for a couple of days before it actually comes off last Friday very aggressively to 142. So the market from 145 to 142, we have a drop of 300 pips, and along the way it has taken out this very significant support line represented by this black color line that I've drawn on the chart here, and the market now is rebounding from 142 as we are speaking now. Currently market is trading just under 143, and if the market can go up a little bit more to 143 half to 143.70, that would be a great level to position short for the next leg down, perhaps to even test the 138.70, which is this pivot line that I've drawn here represented by the blue horizontal line. Now over in cryptocurrencies, we see a bit of a pullback. Recent times, you can see that the market is doing an expanding triangle or a irregular three-wave pullback. So you can see that the high traded last Friday, Thursday, as 31,500, which is marginally higher than the 31,458 that we saw on June 23rd. So this is a higher high compared to the previous, but there was a reversal pattern on the back of this new high here that we saw for this month itself. And there's a very good likelihood the market may actually go lower, maybe perhaps to marginally below $29,500. This is what we call the expanding triangle, in which we have marginally higher high and marginally lower low, and this is creating the possibility of a expanding diagonal or expanding triangle pattern, or the other way, this could be an irregular three-way pullback. But whatever the case here, I think my target is between 29,000 to 29,550, and if the market do pull back into this bracket of prices, I want to see that there are buying interest re-emerging. So this is basically going to be a sideways pattern for a while, and if this is an irregular we call that a expanding triangle, there should be a 5-wave movement. We have A, B, C, D, E. So this will take maybe more than a week to pan out, and the end result is for another expanded rally beyond 31,500. So this is my outlook for Bitcoin itself. In the meantime, you take care, and I come back to you tomorrow with another update. Bye bye, take care.